chat section here as well, so I can answer them later on as well. All right, just going over like BTC for now. Let's just go over what BTC is doing and how or what setups I'm looking for. I think Rizel shared a long setup around here as well yesterday. Like I think we had a long entry from around here. I think he shared one here and the TP was probably here. I don't remember one, but I'm holding a long from like around here just before that low is formed because this low here is like a very clean low. Just regarding like a three tap setup as well, and if I could like show you order flow as well, there were a lot of people just trying to ape into shorts around this low for it to just make a further nuke down around pre-close session, but obviously that didn't happen because a lot of like the passive bids were sitting and then they picked price up, and after that we have just been like ranging around, and now that like FMC is I think in a few minutes. And I'm expecting some volatility, and it would be great if you could just like reclaim back into the range, like take this internal low that's here into an FVG that's like sitting around here. And if you go to the 5 minute or maybe the 10 minute or 15 minute, you would be able to see decent support of an FVG or an order block you can mark out here. And if you do take that internal low and reclaim back into the value area low that we have, and I discussed like in the last session AMT as well, why this here is very important and why like volumetric levels are of so significance in the first place. And what you want to look for in volumetric levels is a balanced area, and just going again over what exactly AMT, auction market theory itself is. So if you have a balanced area like this, which has like condensed volume, and what do I mean by like condensed volume? So if a price ranges and is around a price level for a long time, obviously a lot of volume is being accumulated there, and you would think that okay, like a move from high to low, this created a lot of volume, but it's starting to like compress a bit, and that compression you can also call like condensed volume. So just compressed volume that is being compressed in a very minor bracket range of like price as compared to a bracket range of price that was caused by the move down or a trendy move, right? So a 3% move, 0.6% move. So it's just volume being compressed into a very specific level, and that's what creates like value. And what value does is value creates balance in price, and that balance is represented through volumetric tools like a volume profile, and those also act as like very significant levels of importance, like range highs, range lows, and those levels are all obviously like providing support if price comes here and there's some bidder sitting at that level, it's likely that it returns to the other side of that level. And again, since we were talking about like compressed areas, it's not likely that it will face any sort of like rejection from this level, from the middle, or just like after bouncing like from here. It is a 90% case that it will 100% like get back up to the other part of the value, and that's how like important compressed value itself is. And about like AMT, and what AMT represents is that obviously when price is like balanced and it's like compressing, it's likely that it rotates around that level a lot, and then when it breaks down that level, it is likely that it becomes imbalanced and rotate to the other side, seeking new balance. Either it's like a previous value, so if there was like some sort of like range that was happening before, price got back up, it started to seek balance again. And obviously when it's trending, it's imbalanced and it's seeking balance again. So price was like chopping around here. It is likely that it's going to get back into that previous range and start to like seek more balance and then start to like range in that level as well. So that was overall how like AMT worked in the first place. And if I could just like clear up some of the things in the chart here, I could show you why I even meant like if you do come back in, obviously now that you know it's going to rotate to the other side. And the reason why it may not hold the low here is because we have a POI that's sitting here, which has not been like tapped. If I could just extend this here. So this is a POI which has not been in tapped. So it's likely that it could potentially do an inducement. And what is an inducement really? So if you have a POI that's like maybe an order block, an FVG something, which is like caused by a low that is made in price, and it has not like been tapped or touched, and let's just assume that price is rejecting from a higher POI, and it's likely that it comes to that POI, and if it reclaims that specific level, SFP is that internal low. So the low that's going to cause a break structure is not this. It's going to be obviously this low, the significant low, and the significant high. So if it does like do a so-called break of structure of that low, that is obviously not a break structure, because a break structure is caused by a shift in the market of like significant lows and highs. So if this is a level that will cause like a break structure, a bearish break structure, and if there's like internal low made in that, and if price comes to that low and tries to like obviously SFE that low, then that is considered to be an inducement, which is just like taking internal liquidity. So if there were like stops that were just sitting at this level, they were like taken out by these aggressively people who were selling here, and once it reclaimed that low, it SFPs that low, it is confirmed that that was an inducement, and it's likely that it goes much higher after that. So that's what I'm potentially looking for, an inducement that is caused by a reclaim in value area high that leads price to rotate to the other side of the value and eventually run back up once we start to like escape this value and this range here. Obviously, whenever price escapes a balanced value, it's likely that it's going to become imbalanced and it's going to seek prior balance. And where is a prior balance? I don't really see anything like much of a range around here or even here. That's why it's likely that it's going to seek the NPOC level, where there was, as compared to this entire move, there was a bit more range, right? So it's likely that price seeks this balance and comes to this NPOC. And this NPOC is like a daily NPOC around this level, and you can mark that as well if like you aren't using Excel charts, which I believe a lot of you aren't at the moment. Maybe later on you guys will. And Excel charts is like very clean in trading and understanding order flow itself. But if you're only using TradingView itself, I can tell you a way to like mark out daily and POCs, and that would be to just like look at the time that you have at the bottom here, and let's just see where did the day start for us. Let's see okay, this is like Sunday 28, and where does the Monday, okay, so Monday starts around here, and when does the Monday end? So Monday ends around this level right here. And I see that the POC of that day is like around here. And let's just see where the POC for Sunday would be then. And if we do like market from a level where Monday started, if you go back to the level where Sunday started, I think it should be, it's still around here. And the POC that I marked is more like a daily session profile. If I could just like maybe give me a second, let me open an Excel chart as well, as it would be like easier to share where the POC level that I've marked at is. And now that I have like Excel charts opened on me, let me share screen again. Right. Let me share my screen here. Okay, so this is the XHR's like just desktop template that I have like that's in my personal use, and you can see like overflow in the workspace. I have like almost everything here. I have the overflow. I have CVD. I know like how many shorts are entering or how many longs are entering at certain levels, and then I have like TPO as well. And if you guys can see, that level is not exactly represented by this volumetric level. That's why I don't like using overflow tools on TradingView itself. But this is a and obviously a way to mark it, like mark a volume profile from start of the day by watching the time that's down there on the time scale and mark it till the end of the day, right? But you see here that the POC on this volume profile is like down here, which is caused by some irregular moves. But if you go to like the exit chart here, the volume POC, the time POC is obviously above around this level 69.630, which is like 69,600 around here, which is obviously my TP in the first place. if we start to like slow grind around here, and that's why the order flow tools are like exo, and mainly what we use is exo itself is important. And if I do mark out like a specific idea of, or maybe give you an idea of how I'm looking for price, just based on like levels that you want to be looking for, levels you want to be trading, and based on like value itself. Let's just say this here is a 2-day volume profile. And if you combine the 2-day volume profile, we get like a combined value area. So price is around here somewhere right now. And if price does come back into this high, obviously it's likely going to rotate to the value area low. And if it does like get back up and like hold the low from yesterday, make another higher low, it's likely that it comes back up and goes much higher, tap this like 65, 7.5 first resistance, and then eventually tap the 69.6 level eventually. Uh, and if it doesn't, and if it starts to like slow grind down at this certain level, which again, auction market theory just represents like auctions of buyers and sellers. And if you are able to recognize those auctions through these tools or the chart itself, you should be able to trade and call for a wider move down or a wider move up based on the reactions you get at certain levels, like escape of the value area high or escape of the value area low. So if you see a slow grind down below the value area low around here, you should be able to take a short, like a short around here, put your stops around the POC level, and then aim for around the NPOC that's like sitting around here. That is 64,300, which is also a long POI. So wherever you're trying to like close your shorts, that is obviously a long POI as well. And similar for like levels like wherever you're trying to like close your longs, it's a level for shorting as well. And this is just what the volume profile and TPO represents. And this here is like in much depth, like but I don't want to like go over this right now. This will take like a few hours to just explain what's going on here and to be able to like actually trade it. I'll just like mark out some significant levels based on all off of that. And currently we are reclaiming back into it. And if we do start to stall a bit, has like FMC happened yet? I'm not sure. If somebody could update me in the chat, I didn't like keep a record of time. And if I could just like clear out some of the charts here. Rates unchanged. Okay. All right. Yes, so not much has happened. Yeah, but I would just like volatility. I don't really care if we do get like a huge move either side. I just need to like get some volatility to be able to trade it. Even though you see here, this is like a clean move down. And the reason why I consider like a pump in the first place is because if I could show you DXY and a USDT dominance chart, is because like DXY itself looks like very good for now. Like it looks in like it's in for a pump. And what DXY could potentially do, this is a 4 hour, this is a 1 hour time frame right here on DXY. And obviously we have like FUG reclaimed into that level. And it's likely that we come a bit higher into this level here. We reject a bit off of here, and then we eventually start our run on DXY, like from around here. And if we go to maybe a bit more higher time frame, and we could see it's like, yeah, it looks pretty good for like a decent run up from around here, or anywhere level around here to around 107, 1058. And obviously what that will do to BTC on the hard time frame is that it will obviously give BTC a chance to like pump up around till this level 69, around again the value area high on the hard time frame, and give you two chances to enter like huge shorts, either around when we like reclaim into like let's just say we start to pump around here, and we come around this price and we do not break this specific high, and we come back into that range. That is where you want to like look for shorts and put yourselves maybe around here, and just like go risk free, because once we've reclaimed, we have like taken internal liquidity, And why do I say like internal liquidity? If I do zoom into this high here will likely be taken as we have an FVG just sitting above it. So if price comes around this level, and if it like starts to deviate it, like SFP that level, it will be considered as like internal liquidity, which was internal liquidity in the first place because it has a resistance, a short POI right above it. Again, this is also inducement. So if there is any high that's made and there is like a short POI that's just sitting above the high, and if we do like reclaim back into resistance levels after taking that high, that is considered to be inducement as well, similar to what's happening here. And that would be your trigger for like a decent short around here. And your subs would obviously be this high here, and you will look for a breakdown after the structure. Like let's say we come into the high, we do SFP that high, your trigger will once we reclaim that specific high, and then we start to like slow grind down. You would not want to see any sort of like low hold structure like this or like this. You don't want to see any sort of like choppish structure. What you want to see in your favor is a continuous grind down. And if you do see something like this, then highly anticipate that a move above is still left because the XY still has room to like nuke a bit more until eventually it like pumps up a bit, and I will share that as well. So if it doesn't do that here, it's likely that you will get like a decent short after the SFP of ATH all-time high around here maybe somewhere, and your invalidation to that would be like much higher, and then eventually get the value area low of like the higher time frame range. I am personally just not interested into buying this level because if you go to the daily time frame and then you see what's going on, would you really be interested into like buying into the this level here for a long term? I personally am not. And even by the time like what's the best case even that could happen? It could go to like 75 to like 80, 80 to 85K. But are you really willing to like bet your 100% portfolio for like a 5 to 6K move? I personally would not. That's why I'm personally not interested into like taking long-term positions around here. I am much interested into buying anything that comes around like this this gray box, like 41 to 46, or around this entire level. So I'm personally much of a buyer around these gray boxes, and I'm just not willing to buy like long term or like go all in 100% around these levels right here. And that's why I'm looking to like go for those shorts once we reclaim that sort of like level and structure around like if we do come back up to this high, and if we like start to reclaim back again, same ideology here, we will short that reclaim there and put our stops on the high, whatever the high is made, and then aim for the liquidity that is sitting below, that is the value area low. And it's likely that BTC just like chops for like a quarter after that, and eventually like gives much clearer direction into these buys eventually, which is likely going to happen. And another consequence to that would be the USDT dominance. And I don't think like a lot of people use that chart. I used to use this chart a lot back in like 2021. Not no, okay. In 2021. Also, the recording is being done. I will share the recording later as well, so you guys don't need to record. And the reason is that USDT dominance, it represents like inverse chart for Bybit and the market itself, because USDT dominance represents the flow of money into USDT, right? So like if people start to sell BTC, they're obviously getting their USDT back, so USDT will pump, right? And if people are starting to buy, they're obviously getting rid of their BTC, then that means that USDT dominance will go down because there's less and less USDT because people are like buying up like crazy. And if I could show you a correlation like this, and if you see that higher low was made on USDT dominance around here, and from the bottom of this move to the top of this move, if you like count for dates and dates, that like around it started to form a low around 6th of June till like 5th of July, and if you go to the BTC chart and see where 6th of June happened, and you would see that 6th of June was the top right here, and 5th of July was the bottom right here. So this chart is like an inverse proportional chart to BTC itself, and you want to be mainly looking for levels like this here or levels like this here. That's like potentially forming a low, which could lead to for it to go much higher. That's why I'm saying that it could potentially come back down a bit, and that's where the final pump for BTC is likely going to happen. And if USDT dominance like breaks down this level and it goes to like this, it's likely that it's going to like sweep the all-time high, pump up a bit, and then eventually get back up. Whenever like USDT dominance comes around this level, I will be hugely shorting BTC and targeting much lower as long as USDT dominance keeps pumping, and it should go around to this level, which will just like cause BTC to go around, I think 44K. And if you mark this move as well, I think like from 21st of July to like this is like just 3 days, so we'll just ignore this. But this move here is what caused the move here, move up here as well. And it's just like an immensely chart that you should take into consideration and your data if you're trying to adjust for your hard time frame bias. And moving back to like, let's just see what Ethereum is doing as well. Ethereum for now is just like moving like a shitcoin, not really much that's going on here. Just chopping overall, but I think if I could show you the hard time frame view for Ethereum as well and zoom out a bit. Ethereum also looks quite a bit cooked, and if it does not like reclaim this level here. But I'm personally not as bearish on Ethereum as I am on BTC. I'm a huge buyer of Ethereum, anything that's like below 2000 and around like 2.8 to 2.6. And it's just I believe that Ethereum will much more likely just like chop and range as compared to BTC, which will eventually obviously get those lower levels likely. And Ethereum is a decent buy, and I recommend that probably go around 2.5K. Anything below 2K is a buy for me. And it's just on the lower time frame, if you want to consider that as a scalp, Ethereum as a beta scalp, you can highly do so, but I'm not interested into trading Ethereum as it's likely that it's going to range and chop and give like low volatile PA for like a few more weeks, and you should be much more focused on BTC, depending on the level it is a very important level right here. That's why it's much better to trade that. And for Sol, we could go over the higher time frame as well. Solana, I think I discussed on some other call, but I was like long on Sol for like a few months, still around here. So we had like longs running. I think even Rizel had like spot buying around, I think April for Sol. I'm still holding some partial Sol till around 280. And the reason why I TP'd a lot here is because we are doing that same thing, internal liquidity being taken, retrace back into the high. And if you do reject here one more time, it's likely that Sol comes back around 140 and then form a higher low, which will eventually run it up to like 240 to 20, and that's likely going to be the case if BTC starts to like reject off of around this level. And obviously it's a given that BTC is likely going to retrace 64K. And that's my overall view for Solana as well. So if you are in Solana, I recommend that you like try to be more cautious as long as we stay below the 190 level. As because if we do, we are likely going to 140, and it's a given. And the other alt I have on my screen is DOGE as well, which so far is looking good. I'm not really sure on DOGE because of the volatile spikes that it could have like any time. That's why I'm more of a buyer either around like, which I did some buying around here, and I'm looking to maybe sell around a bit here and a bit here, but I'm mainly trying to like buy and get BD like DOGE anywhere below 0.11 level. And if I could show you the higher time frame level, this like a very good bid level right around here, 0.11. And if you go to the daily time frame on DOGE is like looking very good for the daily time frame around again that same level, because it's likely that it's going to get that sort of like pump that it does eventually somewhere around here, start to like hold those, and then eventually get back up to 0.2 in the near future. So that's my like overall view for alt as I am looking at BTC. And you may think like if you're expecting BTC to like go to 44K, why are you not expecting alt like a Dodge to like move down that much? And what happens in cases like this is like let's just say BTC is at a high, and if it like S&P is at high and it like is like going much lower, what BTC will do is like it will obviously nuke and take like most alts with it much down, but coins like which have like escaped accumulation periods and have like are holding the high of those accumulation periods, what they will do is like they will not slow bleed down as the major pairs will do when BTC is sneaking down. What they will do is like they will slowly fade out shorts by aggressively bidding and passively exiting shorts. And what that will do is like it will cause that specific pair to start to chop up and create another sort of accumulation. So you see what accumulation is caused by? It's caused by a momentum of sellers that keep selling the coin, and then after that what happens is like a compression zone where momentum fades out. So people who had been like shorting aggressively in this move down, selling aggressively, are now starting to fade out their sells because there's passive bids and limits that have like come into that level, and it's likely that level is going to lead to a much higher move up because sellers are exhausting here. They're getting out of their positions. Passive means like limit orders, limit buys are being filled here, and that's creating an accumulation zone. And it's likely when price starts to trend up, it's going to lead to an expensive move afterwards. Maybe it takes like a month, maybe it takes 6 months, maybe it takes a few weeks. It depends on the coin and the narrative that is pushing the coin. So far, that was like the overall for BTC and Ethereum. I also did like take a scalp shot if I could show you here. Let me clear some out. Right, so I could mark out the volume profile here as well. And the reason I took like the volume profile from here is because I shared in like videos that Rizal pinned in his channel as well. And that was because that obviously if I draw it from here, from like this level, that will create like irregular moves in my volume profile. Like you see there's a low volume node in my compressed area, which is something that you don't really need when you're market out balanced area. So your balanced area needs to look somewhat like a D, something like this. This is what a balanced area is perfectly represented by. And if it's like got gaps like what you see here, like if it's got a miss shape, something like this is something that you don't want to be looking for, as there's like liquid points in that value area for you. That's why I always mark it out whenever the range is started. And like if I delete this here again, and if you can mark like a range high and a range low, this just does not make sense to be marking as a range, right? And the better range is likely to be considered as this range right here, which may have like deviated a bit down below, but eventually it did reclaim, and it is still chopping within that. And that's why I like marked my volume profile from around this level to this level, and it creates like move it around here. It does create that much more better volume metric structure that looks more like a D right here, which is a much more better representation of value and compressed volume. Compressed volume is what we are looking for and what we are willing to trade, and that's likely going to give you the best rotation. And I did take like a short, which I was mentioning, I did take like a short around here before FOMC, which I was like holding for a while, which I had like a stop around here, because obviously if it's going to go like start escaping here, then I could just like try to like ape longs around here till like around here, and if it doesn't break this POI rejection, it's likely that it goes to the higher POC easily. And that was my reasoning. but it did start to hold a bit on the POC, like you see. The only thing that's holding price right now is the POC here as well. And once we break that POC, we are going to eventually take that low and give us a better opportunity to take a long around here. So that's just rotations is what I'm looking for, like trying to scalp right now. And the other long setup that I was potentially looking for was around like here, around the NPOC level that I was showing you guys. Just, I think I could show you like 64,300, where 64,300. Yeah. So there, this here can also be considered as an internal liquidity and inducement. So we do have like an FVG that's sitting below just that low. So if you do come down here, take that low, tap into the NPOC that's sitting here, that is also a long setup that you can take. Something like either like a reclaim into the value area low here to at least run this POI, or like along once we reclaim into that inducement level to around this level. And the only reason for that final pump to be trying to like catch it, but again we use CT dominance, it has some room to go down. Obviously that means BTC has some room to pump, and same for like DXY. DXY still has some room for going down and like around here, this POI, and that will eventually cause that sort of a pump. And if like things change a bit, maybe like DXY gets above this high, while it starts to like make BTC chop as well, then maybe we do not get that pump anymore, and it's likely that this high here was the top, and the next move is 64K. So this is just like a few structures that I'm looking to trade on BTC, Ethereum, and depending on DXY and some other factors. And yep, that's pretty much it. I don't think like Rizal has any limit for longs at the moment, and that could highly likely be just because we're in a very choppy structure here. It's better to either try to long slow grind here than try to like keep longing here, here, here. And by the time you are like liquidated or are having like many losses on long, you realize, oh shit, that may have been like a lower high here, and it was very clear that the bias should have been short in the first place. So it's better to just like try along around here or around the value area level here. And until then, you can obviously scalp. And if anybody has like any more question, you guys can let me know. I did explain a lot on AMT and volume profile in the last session, and I wanted to explain a bit more about like price action, but I think we can do that like next week. I did go over a bit again on volume profile. If anybody does have any question, you can let me know. And if there's any certain topics that you want me to like do sessions on, that would be great as well. And for Rizal, do you have any? Are you still in the call? Let me see. Yeah, Rizal, if you have any like topics you want me to cover, you can let me know. What will happen with alts if BTC would dump to 30 to 40K? I think alts will just be plundered, like just obviously what happens to alts, they will all bleed. Depending on which alts you're in, you should try to maybe reposition, because some new alts like Hopcat, some similar alts like that will likely have a better higher low structure, and they will have like better longs after that sort of like dump has happened. On what time zone do you trade the daily volume profile? It doesn't really matter what time zone it is, because actually, I could show you what constitutes of a daily volume profile, right? A daily volume profile, or a day itself, is comprised of four sessions. And what are those four sessions? Those four sessions start from Asia, because I'm around that continent. So Asia around here, you could like assume that the day starts for you at London session, and each of these sessions is 6 hours. So four sessions, 6 and 6, 12, 12, 18, and 24. So And the name of these sessions are, first of all, I consider the day to start around pre-close. Then we have like Asia session, then we have a London session, then we have CME/New York, the American session. And pre-close session is the one that's the most shit. You don't want to be trading it, and the reason for that is that Forex markets indices are like closed around this session. And it's likely that if you're trading BTC, it's going to like just have more rebalancing of positions, just longs closing, shorts opening, shorts closing from like a prior session, like Asia session, London session, and you don't want to be trading this session mainly. And if you are like only trading the session, you will eventually see a decline in your win rate because it's just rebalancing and there's like no sense to make out of rebalancing of positions because let's just say if a fool of a person is like long from around here and he has no strategy, he will like close it around here without thinking, and that will and if that like position size is big, that will just like create weird price action, weird moves in price itself, and that's why this session here is something that I personally recommend people to avoid. And the better sessions are Asia session. You can see like a volatile move down, low hold, a clean move up, and it's much easily tradable. So it's like London, like you can see a slow grind up, a very clean slow grind up. This is the 5 minute chart. On the 1 minute on the lower time frame, it's much cleaner. And CME New York, it's like crazy today only because of FOMC, but usually these three sessions are what I recommend people to be trading. All right. A question is asked, do you always use same FRVP inputs in different times? Yes, I do, and you can like copy mine as well. So the number of rows here is 500, and what is like number of rows? It just represents the number of like rows around here. So if I lower the number, it will give me more like bigger candles, which I don't like. Like this doesn't look aesthetically pleasing, so I just have a number that looks better, 500. And the main data is like the value area volume, which should be 68. And you don't want to extend it to right. It's going to extend it to current PA, which is not really good. And you want to keep it that way. And volume should be like total. Up and down just means like the up and down, like it's going to exclude that. And you don't want that. So this setting that you can like copy. And the style is similar to this. You can like screenshot this and maybe use this like take it from the recording of the session later. And another question is asked that now let me see. How can we know the times of these sessions? Okay, so it depends on where you are actually, and I have like uh Asia session. I think Asia sessions occurs around 9 a.m. or 8 a.m. depending on it actually just like depends on where you are. Just consider and keep in mind that each of these session is like 6 hour, 6 hour, 6 hour, 6 and 6, right? And depending on like what session timing it is. I could tell you when New York closes though. New York closes in around like 30 minutes. In 30 minutes, New York will close, and from those 30 minutes, you can start to count like 6 hours, then 6 hours, 6 hours, and 6 hours, according to wherever you are. If you're in like Poland, if you're in Dubai, if you're in maybe other parts of the world. So d depending on like what closes in the 30 minutes, when New York closes from that time, set 6 hour intervals, and that will be your sessions by those timings. Now, if rates stay the same, we shouldn't see any rapid moves today no more. Are we heading to well? Which is like obvious we are heading to well, but this area is just compression, and this could be considered like a low hold right here. Like if POC provides a low hold and there's like escape of this value, that is like a clean long right here. A slow grind here is a clean long. Again, the only longs I'm looking for is a slow grind around here or a reclaim of this low here or like this level right here, the NPOC level. And what was the other question? We just want price action. Yeah, I could do like more sessions on price action. I was mainly looking to like give out some sauce on how you recognize like POIs in the first place. And there's like four given set rules to understanding POIs. And the first rule itself is like marking out extreme levels. So if you're just looking for this price action right here, and if I clear out some of this here, and the four rules of understanding the market structure itself is first of all marking out extremes, marking out like swing lows and swing highs. And within that, that's the first rule. So you understand like what you're trading if you're in a range environment or if you are in a trendy environment, right? That will help you understand which environment you are trading in the first place. And then you want to mark out extreme levels. And extreme here would be like this. That would be your second rule. And the third rule would be to observe what current market price is doing. So if I do like a replay till around here and go to the 3 minute maybe till around here, if I mark it out and delete some of this here. So if you have like the four rule set, and the first thing you want to do is like mark out obviously swing lows and then swing highs to see what environment you are in. So market has like two environments, a range structure, then like a trendy structure. Those are the two environments like the market has in the first place. And once you recognize what environment you are in, you want to mark out extremes. So the first rule is to mark out low and highs. The second is to mark out extreme levels. And what do I mean by extreme levels? Extreme levels are just POI, which I explained in the last call as well. It's like 0.5 of order block, and an order block is just the last move down before an impulsive move up, and vice versa for the last move up before an impulsive move down. And that's like just what an order block is for. And if you mark out the 0.5 of the order block, which you can mark out through like Fibonacci tool on TradingView, you can use that. And once you mark out the 0.5 level, and if you see like an FVG that is overlapping that level, so if I see that there is an FVG that is overlapping the 0.5 level, that is going to be my POI. So I have like a POI that's sitting around here, a 0.5 level around here, and that's my second rule, to mark out extreme POIs. The third rule is to observe what current price action is doing. So the third rule is to observe what the current price action is doing. So the current price action is currently forming a series of trend, a series of higher low here. And let me see if somebody has like questions here. One more question. Which time frame do you use to define the higher time frame bias? It's like a step down process. So first you go to the 4 hour, then you go to the lower time frame, then you go to like much lower time frame as well. So it's a step-by-step process of like going from 4 hour to 1 hour, then 1 hour to 15 minutes, then to like 5 to like 1 minute to execute your trades. And the other question is, can you make an example again of how to draw volume profile on the graph drawing the range? I'll do that in a while. And what I was repeating here was that you are looking at for main rules. First, to mark out string low, string high, then to mark out extreme POIs. That's the second rule. The third rule is observe the current market price, CMP we call it. The current market price, how it's like moving, what's it doing. For now, it's like trending up. But if it gets that rejection, it is likely that it's going to define exhaustion. So after a continuous move up, if price does not start to like completely break up like this, continue to hold lows, it is likely that it's representing exhaustion if it does not do this. And what do I mean by like exhaustion? If it starts to move up and it starts to like stall a bit like this, starts to like chop more, it just means that there is like no willingness to buy, and buyers are getting exhausted, and it's likely that there is a reversal inbound. And that's what was happening around here. If I clear some of this out a bit here, and depending on how like price is moving, and we do get that rejection, then we do get like an SFP of this level. And if I mark this out here, you start to see that this here structure does not look as good as the structure that you want to look at. For now, it's like obviously holding those. Then you could obviously try to like go longs here, which would be the better trade. But what it does afterwards is it does go up, it gets rejected, and by the time you're here, it's like broken that trend, and that reversal you are looking for, exhaustion, is there, and you should be like positioning on shorts around here, or however the price is developing after it has done the break structure. That is the fourth rule. So you want to observe price action, um, current market price action, and you want to take your trades based off that, knowing wherever whichever level your extreme POIs are, and whichever like market structure you're trading. So you're trading a trend, it's likely that if it breaks down, it's going to cause reversal. It's likely that it's going to reach the other side of the extreme very easily. And you want to be trading the break structure only when there's like continuation in your structure. So if I do see continuation, I would want to be trading that. And by the time you're here, like this was here was a very fast move, but usually most of the time you get like a sort of a slow grind here, which like you are able to position much better, and go short there. And if it's not for the position, oh, and again, one thing you want to keep in mind, your stops and invalidations should always be at a significant high, because if it does come back up here and validate me out, it has like represented a complete change in structure again, and I will have to be looking for longs, and that longs is going to likely work out for me better than the short did, and you are simply going to like make back the loss that you have occurred, and that's something you also want to keep in notice. So there's like 3 to 4 rules into understanding the current structure itself. And the fourth thing I was talking about was like uh, depending on the second rule. So the second rule was to mark on extremes, and based on that rule, anything that's like within that swing low level to the swing high level is like useless. And so anything that's in the middle, you don't want to be trading until and unless like price comes to that level, starts to hold a low and starts to slow grind up, or give you some long triggers. That's the only time you want to be like focused on the middle POI. So that's the fourth rule. The fourth rule is only to observe current market price action in the middle if there is actual price action forming, and if there is a trigger to and confirmation that it's likely going to reverse from the middle and front run your extreme POI. And there is another question: how can we know in advance if it's a false break, especially when it breaks just outside value high and starts to subgrade? How can we identify like if it's slow, like a false break, like false break down here, or above here? I'm not sure I understood the question. Okay, so you're asking for a like a false breakdown here. Yeah, so a false breakdown around a break structure level is like pretty easy to recognize. So whenever price comes around a break structure, what you want to see is like continuous grind up. Oh, sorry, a continuous grind down. So you would see a series of like lower highs, more break structures, another lower high forming, more break structures. This is what you want to be seeing, right? And if price does come to like a level of break structure, like let's just say here, but it starts to like hold low. So it's formed an initial low. It has formed an initial low similar to this structure. And if it starts to come back up a bit here and start to hold the low again, which was not the case here, right? Which is not what we want for shorts, right? We don't want like low holding when we are trying to short a break structure. And if you do get that short level and reclaim above that break structure level, it's likely that it's going to go to the higher POI and validate the higher POI. And even after the higher POI, if price has like done break structure into an FVG, then it is highly possible that it grinds up here as well and then take out the high as well. So this is the scenario that you want to be looking for if you want to avoid getting wrecked trying to short a break structure, and similar for like a break structure around here. So if you do get a break structure, and if you do start to like retrace back down, no break structure, just continue down, it's likely that it has been SFP'd and it's going to go to the other POI. I think way is turning on volume and see there is no power. One way to recognize this obviously is by order flow itself, which like where you can actually see like what's going on if there's like buys entering the market, if there's like shorts entering the market. Obviously, one of the ways to see order flow itself to be able to recognize such fake break structure and fades. And another question is if I can make an example, Popcat, it's slow grinding down below very low and hard time frame, but it looks like a fake setup. So if it does look like something like this, which I've represented, then it's likely that it's going to go to the higher POI right again. Because when you're trying to short, you have to understand if you are trying to sell, the market has to sell as well. It doesn't have to like hold lows or chop. You should be trading strength and you should be more focused on trading that in the first place. You should just like let the market do its job and you don't have to like stress over your positions and try to fade the market in the first place. And if anybody else has any questions, you can let me know as well. All right, that's great. And maybe you do like more price action sessions like later on, as discussed, and like most of that knowledge I've like pretty much shared in notions and like in courses and like friends notion as well. That's like a huge amount of content just like sitting everywhere around me. So if anybody does have like any queries about it, you can like always DM me or Rizal, and we'll just like post up all of that and give details on any question that is asked. All right, if anybody else has any questions, you can let me know. If not, then we can like conclude the session. And let me see what BTC is currently doing right now. Let's delete some of this here. All right, so this looks like a pretty clean slow grind for here. And once we start to obviously reclaim above that like range value area high, that's your trigger to like get a decent trade somewhere around here. And your stops would obviously be the lower high. You don't want to have like a much wider stops, but be open to the idea if you do come back into the value area high, you are likely going to again chop a bit more, and a better trade would be on the S&P. So that's the only two scenarios that I've been looking for longs around here. Well, I guess like nobody else has any questions. Well, then I think I can conclude the session. And if anybody does have any query or if anybody does need any sort of like content or videos, I have like hundreds of them like to this day. I think I spent like 2 or 3 years by the time I'm like trading, and every day I'm journaling, every day I'm like making something new. And if anybody has any questions, I'll be happy to provide. All right, I think that's pretty much all the questions. Maybe let me check the sessions chat. Does anybody have any question in Rizal chat section? Let me see. Right, if anybody does have any questions, I'll answer to everybody. Yeah, it's recorded, and I will answer to everybody in DMs in the chat as well. And I'm happy to provide and happy to share content and data with you guys. Well then, see you guys later. It was great. Thank you for joining. Goodbye.